morning, everyone, and welcome to Morning Markets here at True Potential. Well, as you can see, it was a weak day for asset markets on Friday with equity prices down, led by European markets as the crisis in Ukraine broadened and market worries extended to the exposure of European banks with regards to Russian collateral. In particular, we're seeing high volatility in commodity markets, especially in oil markets. So even this morning, Brent oil prices are up almost $10 since we spoke to you on Friday. They're up almost $20 since the close last Thursday and up almost $30 on the week. So this has profound consequences for global inflation, has immense consequences for the decisions monetary policymakers will face at the end of this month with regards to raising interest rates. And we're also seeing some quite large moves in soft commodities such as wheat, where prices are up almost 50% this year. And this has very profound consequences for global importers of wheat, particularly in the Middle East and parts of Africa, and even in places like the UK, where obviously wheat is a staple with regards to bread, etc. So these price pressures are going to feed into inflation over the coming quarter. Very difficult choices faced by policymakers, but there's some light ahead, particularly given the economic strength we're seeing in the jobs market. The most recent data we've had from the US is very positive. So we saw a top quartile jobs print, so over almost 700,000 jobs were created in the US for the month of February. But just as encouragingly, more people entered the jobs market. So we saw jobs higher and we saw more people entering the job market. And that perhaps explains why we've seen a moderation in wages there in the US, but that should be taken as a positive as well. If we're seeing some moderation in the demands from workers as they enter the workforce in the US, then perhaps this can be seen as a leading indicator for what may come in Europe and the UK as jobs data for February gets printed in these markets over the rest of this month. So that is encouraging. Also thought it might be worth mentioning and adding some more context to the concept of volatility. So over the last month or so, we've spoken a lot about the volatility that's being realised in markets and how we're seeing big swings in intraday market prices. Well, what we're now seeing is that market expectations for volatility is also elevated. And that means that we can expect to see these 1 to 2% moves, particularly in equity prices, to continue pretty much for the next 30 days in markets. So we should expect that as we continue to talk to you about volatility, that higher volatility will be realised, not just in equity markets, but also now in bond markets. So in fact, if we put this into context, volatility we're expected to see over the next month is double what we were likely to see at the start of February. So we are likely to see some fairly profound swings in both bond yields and in equity prices, such as in the S&P 500. However, what we are doing in this type of a market environment is remaining patient, and that's one of the themes we've been speaking about in previous morning markets and also in the weekly podcasts. So this is a time just to be forward-looking, to be patient, to remain invested, and also to be diversified. And that's why we're seeing, for instance, some quite strong moves in bond yields as they fall and they add alpha to diversified portfolios. So we'll look forward to speaking with you about this through the rest of the week, and as we go into the end of the week podcast. So take care, and we'll update you tomorrow. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.